Marin, let's move on to the gold market. The gold market, a lot of mining representatives and investors, at least the ones that I've spoken to at some resource shows, and again, these are just IR people. It was kind of a downbeat mood at the San Francisco show that I went to a few months ago. I know you're in Vancouver. You speak to the big executives. You speak to the big investors. What's the overall mood with this recent last 2 years of kind of just gold, kind of just being bouncing around, and the juniors, of course, being a lot of them being decimated?
I think it's part of the natural cycle of the resource sector. The guys that I talk to, my partners, Rick Rule, Doug Casey, these are guys that have been around for 40 years, and they've seen all the ups and downs and the sideways and the bipolar reaction to the markets. What has happened right now is there's just too many of these junior exploration companies. In 2006, 2007, there was so much expectation on that, what was gold going to do, that every geologist became a president of a junior company. And there was so much money that flooded into the sector. And it's what I call, unwise money or hot money came into the sector looking for the next hot story. So these geologists that had no business running a company got easy money and hot money at inflated terms. And then over the years, gold has done well. If you look at the last 10 years of gold, it's done phenomenally well. It's in the mid-1600s per ounce right now. But unfortunately, the sector in itself loses about $2 billion a year looking for gold and trying to produce gold. So when you look at that, there's just a lot of these companies that need to go away and shut down their offices. That's step one. Then some of these companies may have good assets, and then the companies that are smart, that have been around, the management team know what they're doing, they have cash, they are going to be the survivors. And now there's just a few of those guys, and they have a lot of supply, a lot of projects to choose from. So I'm very excited about this market because this is the type of market that I excel in. When you have a lot of cash on the sidelines and you have a strong network of understanding who's who in the zoo, you can start picking excellent companies on discount. It's like going to the jewelry store and getting these great companies trading for less than even cash. We have a cash box list in our newsletter. So this is most people get very discouraged in this market. The smart money is getting very excited about these markets because when there's blood on the streets, that's when you want to go deal hunting.
Last we spoke, you mentioned Brazil Resources, another company from Amir Adnani, as a screaming buy. You were obviously, I don't think you were predicting this little move we've had because I think you're looking at the bigger picture. But I think we spoke, it was about $1. Anybody who listened to you is up over 20% in 2013. What are your current thoughts on Brazil Resources?
I'm very excited. I just had a meeting last week with Amir, and he's updating me on the exploration program that they have. And I am very, very excited about a project that nobody on the street is even talking about. Like, that's how, you see, when you invest in the right management team, they don't just have one project. They've bought ounces in the ground at a discount. I know that they already have multi-million ounce potential on their existing, what they call the flagship projects. Now, to boot, there's a project that the street hasn't even figured out yet that is called Artulandia. And the ironic part of this was at the big mining show in Vancouver, there's a very famous geologist named Mel Clone. Mel Clone is one of the original directors and founders of a company called Yamana Gold. Now, Yamana Gold is a multi-billion-dollar gold company, and Mel Clone was the geologist that discovered their best cash-flowing property. And when I ran into him on the street, he's like, "Hey, Marin, you really like this company called Brazil Resources." And he read somewhere online one of my reports, and I said, "I'm a huge bullish of this company, and I'm a big shareholder." And he goes, "I really wanted that Artulandia project." And I said, "Why, Mel?" And he goes, "It is exactly like the project that Yamana has." Now, this is the geologist that discovered and developed that asset geologically. And he's saying that it is a lookalike. And he said to me that this has the potential to be a multi-million ounce project. This is a project that is getting no value in BRI right now because it has these other proven projects. So that's how you look to, if you're a value investor, if you want to be a Warren Buffett of the resource sector, you look at these companies and you ask yourself, okay, how much money does the management have invested? Who's the largest shareholder? Okay, we know the people are good because the management team own almost 20% of the company. That's very rare in the resource sector. Number two, let's look at the intrinsic value. We know that they have gold. They have multi-million ounces potential on their projects. And then you look down further, what other portfolio of projects they have. With someone like Mel Clone, who's had major success with Yamana Gold, is telling you that this is the project that he loves. That is very bullish and very exciting.
Looking at gold, the gold market, do you consider physical gold a cash position or an investment?
At KC Research, they believe that physical gold is like a cash position. So that's where the mandate of the corporation is. Unfortunately, I disagree with that a little bit because I don't really want to be walking around with a few ounces of gold in my pocket. Mm-hmm. So though it is like, cash, it's not as quite as liquid as cash because I can't really take my wife out to a dinner and cut off a corner of my ounce of gold, A, because I'll cut my finger off, but B, it doesn't just quite work like that. So it's not as versatile and liquid as cash, but from a banking perspective, gold is money.
Gold is money. Now, I want to that kind of leads me to my next question. A lot of skeptics will look at gold, or let's just say mainstream people out there, and they go, why invest in gold? It really doesn't do anything except sit in a vault.
The number one reason to invest in gold is insurance. Because there's a massive liquidity in the dilution of not just the U.S., not just Bernanke, but all of the major countries. It's a printing press. And gold, main reason to invest is because gold is money. Before they had fiat currencies, that's the currencies like today we have it, the Americans promised to deliver that money, and they state that a $100 bill is $100. There was gold. The Romans, the Egyptians, the Babylonians, for thousands of years they've used gold before they used these fiat currencies. And every time in history, a fiat currency is a disaster. It ends disastrous. And we have recent examples. If you look what happened in Yugoslavia or Zimbabwe or even Germany with their fiat currencies, gold always holds true value. And that's why we believe gold is the true original money.
In closing, Marin, a lot of people had high expectations for QE3 and QE4 for gold and silver. We saw gold had a great run for 8 years without QE, and then we had QE1 and 2, and it was like a supercharge. And then we had QE3, QE4, we had the fiscal cliff, now we've got the debt crisis, and we're just not seeing those new highs that a lot of people expected. What are your current thoughts on how the gold price is going to react going forward for the next year?
I think it's in a digestion mode right now, and the market really doesn't know what is going on. Everybody's risk adverse right now, and they're realizing that, is interest rates going to go up? All scientific data says that interest rates should go up, but because they're printing and making the availability of money so easy, the market is really confused right now, and I think eventually, is the euro going to succeed? What is going to happen with China? Is it going to have a soft landing or a hard landing? Is it going to grow? What's going on with the U.S., with the fiscal cliff? So I think there's a lot of questions out there, but I think at least you can see with gold that it is an insurance policy to bet against the bankers. Because the one thing you can realize is bankers don't solve solutions. They just cut fees for themselves. And that's what's going on globally right now.
Do you see inflation as an issue going forward over the next year, or is that still going to be contained for I guess the broader public? I know there are many things going up, but as far as the big inflation numbers where everybody knows and it's obvious to everyone, is that going to happen eventually or over the next year?
100%. 100%. You can be guaranteed of three things in life: taxes, death, and inflation. And inflation is coming to a theater near you, I just don't know if it's next week or in 6 months or 12 months. But the reality is it's coming. So that's why if you have a percentage of gold, you're covered. It's an insurance policy.
Marin Katusa of Casey Research, thank you so much. You are a wealth of information. We appreciate your time.
Oh, it's a pleasure.
Thanks, Marin.